So hello friends, today we are going to go through with all the preparatory paper which is going to be very important. Along with this you have to go through with the model paper of this year released one and the previous year of 2019 paper so that you can get good marks. Okay, so let's go through with the 1 marks first. The scarce resources of an economy have competing usages. Okay, second is the consumption bundle that are available to the consumer depend on the price and income. Okay, we'll always go and buy according to the price of the product and as per the income of the thing. Okay, income as per our income. When the price elasticity of demand is more than 1, MR has a positive value. The year of Great Depression is 1929. The consumer and producer can choose between domestic and foreign product. This linkage is called as output market linkage. After this, two indifference curve never intersect each other. Dash means indifference curve is the set of all possible combination of the two input that yield the same maximum possible level of output. In a perfectly competitive market, equilibrium occur when market demand is equal with the market supply. After that, competitive behavior and competitive market structure are in general inverse related. A part of revenue is paid out as rent for the service rendered by land. Dash is defined as addition to stock of physical capital, which is investment. Okay, so that comes as a physical stock for the physical capital. After this, taxes imposed on goods imported into and exported out of India are called custom duties. Dash is the record of trade in goods and services and foreign payment. It is current account. Okay, now let's discuss the matchup. Positive economics is discuss about the function of the mechanism. Linear demand is the demand of the product is equal to A minus BP is the formula for that. Saving is income minus consumption is saving. Domestic services is a non-monetary exchange. SDR is a paper gold. Now we'll discuss this. What is cardinal utility? Cardinal utility analysis is a quantitative utility analysis where the utility can be measured as with the help of numbers. Okay, what is supernormal profit? When the firm is earning more than the normal profit, it is called as supernormal profit. What is price ceiling? When the government fixes the upper limit of the product price or the maximum limit of the price, that is considered as the price ceiling. After that, what is monopoly? The single ruler or a single seller is and which has no alternative product is called as monopoly. Expand CPI. CPI is a consumer price index. What is the formula for MPC? Change in consumption will divide by change in income. With every change in income lead to change in consumption for sure. What do you mean by public provision? The public provision which is being used from the which comes from the government budget is considered as public provision without any direct payment. What do you mean an open economy? Open economy is one country's economy is easy and welcoming to interact with the other country's economy is considered as open economy. Now we'll discuss the 2 marks. What is the law of demand? So law of demand is always have an inverse relationship between the price and quantity. Okay, when there is high price, the demand will be less, and when there is less price, then the demand will be more. So it will be the demand and supply will have the vice versa effect because of the price. Okay, that is considered as the law of demand. What are the difference between budget line and budget set? Budget set is the different combination of a good and as per the income of the consumer which the consumer will prefer to purchase is budget set. Budget line is the locus of the combination of the goods which is equal to the consumer's income, that is budget line. What are the concept of the short run and long run? Short run, it is the short term where one of the input will be fixed and one of the input will be variable. Okay, so that is considered as short run. Long run is that after this what we have is the short run is one input will be fixed and one input will be variable, so that is short run. In long run all the inputs will be variable as because in long run because there is no any kind of a duration. Okay, it's of a long period of time, so that all the inputs can be varied. What is shutdown point? When the MC is cutting to the minimum of AVC, when the MC is cutting towards the minimum of AVC, this point is known as the shutdown point. Why? Because the firm will start producing in this case. Okay, but because after if the firm start to produce, even in this situation the firm will be facing heavy losses. After this, how the wage is determined in the labor market. So it is the supply of the labor, this is the demand of the labor. When the supply and demand is equal, by this we will understand the quantity of the labor and the price, wages to be paid for those labors. So likewise the wage rate is being identified or determined. Last, what we have the question is average revenue and marginal revenue. Average revenue, we know the formula, which is total revenue divided by quantity is the formula. That is, for the with every unit of output, what will be the revenue, average revenue. So that how we will calculate, this is the formula, total revenue divided by quantity. And marginal revenue is with the additional production of the output, by selling the additional output, the additional revenue what we are earning, which is called as the marginal revenue. So what are the three methods of measuring GDP? Income method, expenditure method, and the income method, expenditure method, and the product method. What is the difference between stock and flow? So the stock, which we have kept it as a stored, okay, that is stock, and which is now in the selling, okay, now which is in the sale, that is considered as flow. You can give this as an example of a tap and the tank, okay. So the water which is running from the tap, it is considered as flow, and the water which is there in the tank, which can be considered as stock. Mention the two functions of money. So money is the two function, it is the medium of exchange and the measure of value. What do you mean by investment multiplier? So this is investment multiplier. With the increase in equilibrium value of the final goods output, and so that it will be increasing the autonomous expenditure also, which is called as investment multiplier. For example, change in income will lead to change in autonomous expenditure. So one is our income. In one, if we remove all the consumption, what will be left? So the saving will be left. So this is investment multiplier. It means with every increase in the output, in every increase in the income, surely there will be increase in the expenditure. So that is the investment multiplier. After that, we have the question paradox of thrift. So thrift means being very careful, and paradox means remaining unchanged. So there is no any result even after being so sensitive and even being so careful. So that is the result, that is called as paradox of thrift. So here what you need to understand is that when the people start to save more, saving also, it is not going to increase the overall saving. Instead of that, it will remain unchanged only. So that is the paradox of thrift. Okay. After this, who are free riders? So free riders are those who don't pay anything directly for it, and those who use the goods or the infrastructures for free. For example, park in government infrastructures which is being used for free, where we don't pay anything directly for it. So that comes under the free riders. What are the types of balance of trade? So balance of trade is the value of export and value of import of goods of a country in a given period of time is considered as the balance of trade. What is foreign exchange rate? When you change your Indian currency with any other country's currency, so that is considered as foreign exchange rate. For example, every Indian INR rupees is and when we compare the Indian currency with the American currency, which is dollar, so $1 is equal to 75 rupees. So that is considered as foreign exchange rate. So it is the exchange rate of one country to the another country is called as the foreign exchange rate. Now we'll discuss to the part C, which is the central problem of the economy. Of the economy is what to produce, how to produce, and to whom to produce. Okay, what to produce, how to produce, and to whom to produce, which discuss about the, first of all, what to produce discuss about the problem of choice. As human wants are unlimited and resources are very scarce, to which we need to make choice regarding what to produce. Okay, after that, how to produce. For example, you have taken the decision that you will produce the agricultural product. Now you need to ask yourself again with the question, how you are going to produce it, whether you are going to choose the modern technology or whether you are going to go through with the traditional technology. So that this discuss about the problem of technology which you are going to adopt for the production of your goods. Lastly, you need to ask yourself to whom you are going to produce. It means it will discuss about the problem of distribution. For example, to what kind of consumers you are going to attract the product to. Example, whether your product you are going to make for the babies or for the infants or for the women's or for the men's. Likewise, you need to ask yourself to whom you are going to produce the product. So this is the central problem of the economy. After that, here is the question substitute and complement. Substitute means which discuss about the alternative product. Okay, for example, if you didn't find tea, you will satisfy yourself by having coffee, which is considered as substitute. Okay, so when the one demand for the goods moves in the opposite direction, for example, if the tea rupees is increased, then the people will all rush for coffee. So that is, it will completely go in an opposite. The demand will completely go in an opposite direction. Okay, so complementary means which we are consumed together, which is not alternative but consumed together, like burger and ketchup, bread and jam. So these are all the complementary one. Okay, tea and sugar, example you need to give. After that, here they always go into the direction same. Okay, when there is a price of petrol increases, then the demand for the bike and all will fall. Okay, so that is it moves into the same direction as per the price of its complementary. Okay, it will goes into the same direction as per the price of its complementary goods. That is what you need to write about substitutes and complements. Afterwards, what we have here is the write a brief note on return to scale. Return to scale is as per the law of variable proportion. We have three types of return to scale. One is the increasing return to scale, one is the constant return to scale, and another is the decreasing return to scale. In increasing return to scale, if you have given 100% of your input and you are getting 110% of your output, that is increasing return to scale. If you have given 100% of your input and you are getting 100% of your output, that is constant return to scale. If you are giving 100% of your input and you are getting 90% of your output, that is diminishing return to scale. Explain the long run cost. In long run cost, we don't have any kind of fixed cost. All the cost varies. Okay, in this we'll have only two type of cost, which is long run average cost and long run marginal cost. So the formula for long run average cost is long run cost divided by Q. Okay, and marginal cost is long run cost, that is total cost n minus total cost n minus 1. That is the long run cost. So by this you have to give this diagram, this which is LRAC and LRMC. And you need to write the story that when LRAC decreases, LRMC decreases more than LRAC, and when LRAC start to increase, LRMC increases more than LRAC. This is the story what you need to write. By that it gives the shape of U. After that, we have determinants of firm supply. Again, determinants of firm supply. So in determinant of firm supply, what you need to write is that when technology increases, production increases, so that you will supply more. Okay, but so the production increases and supply also increases. Input prices, when raw material prices increases, then people will buy. Okay, the producer will buy the raw material less, so that he will produce less and he will supply less. Similarly, when the raw material is prices are getting less, then this producer will buy more, produce more and supply more. And imposition of a unit tax. For example, when the government increases the unit tax, then in order to save tax, the producer will supply less by producing less. When there is some kind of a concession in the taxes, then the producer will produce more and supply more. So these are the determinants of the firm's supply curve. Next we have the question, which is the features of perfect competition. So the features of the perfect competition is that there will be large numbers of buyers and sellers, there will be free entry and exit, and they will be selling homogeneous product, and everyone will be the price makers. There will be very less transportation cost, and there will be free mobility of the factor of production, as they are the price makers and not the price takers. So these all are the features of the, and they'll have perfect information, perfect knowledge about the product. So that is the features of perfect competition. After this, how you will write about the working of economy of a capitalistic country? That capitalistic country where it is free trade policy or a laissez-faire policy is being applied, and there will be very less intervention of the government. Okay, this is the second point what you need to write. Okay, the government intervention is very limited, and it runs as per the price and supply mechanism. Okay, price and demand and supply mechanism, all the business, everything is being done. Okay, so this is considered, this is the working of the, and you have to give the example of the capitalistic economy, which is USA, Singapore, Australia. What are the circular flow of income? This is firm and this is household. So firm will give service to the, so household will give service to the firm by being managers. Okay, so what is the circular flow of income? Is it is, for example, firms. Okay, and here we have household. Household will send managers, financial analysts, accountants, professionals and all to the firms. Okay, so household provides services to firm. So services will give them salaries and wages. Okay, salaries and wages, which is they will reward for all the factors of production and services which being sent from household to the firms. And household will buy goods and services by spending. Okay, they will spend, household will spend the money to firms, to which firms will provide goods and services to the household. So this is the circular flow of income. And the story also you need to write same. Write a note on externality. Okay, externality means when you are indirectly doing any kind of benefit or any kind of harm to the environment or to others, that is considered as externality. So it can be considered of positive externality and negative externality. So positive externality is with your oil company, you are contributing to the GDP of the economy. Okay, so that you are indirectly contributing to the GDP of the economy, so that you are not going to get any reward for that. Okay, indirectly you are doing something good, which is positive externality, and you are dumping all the waste into the river, to which many people are got affected, that is that to which you are not going to pay any kind of fine or penalty. Okay, for being the main reason of polluting, so that you are not going to pay any kind of penalty, that is considered as negative externality. Okay, after this we have planned accumulation and decumulation of inventories. Example, first when it is considered as there are planned, okay, accumulation means adding, decumulation means minus. So planned accumulation is that you sell 1000 shirts every year and you keep 100 shirts as stock. Now you planned accumulation of inventory means you are adding more stock, and planned decumulation of inventory means you are removing some stocks. Okay, so planned accumulation of stock is that what you will do, you have you always sell 1000 shirts in a year and you keep 100 shirts as stock. Now you want to increase this stock from 100 to 200, so wantingly you will produce 1100 shirts, so that 1000 if you sell off in the whole year, 100 can be added with the stock. By that your stock will get increased. This is considered as planned accumulation of stock. Now planned decumulation of stock is that your 100, there is 100 stock in the, and 1000 shirts always sell off in a year. Now you want to increase this stock from 100 to 50, so that what you will do, you will wantingly produce only 950 stocks, and you will take out 50 stocks from the 50 shirts from the stock, so that automatically the inventory will reduce to 50. So this is considered as the planned decumulation of stock. Similarly, when the question comes, unplanned accumulation of stock means how you are going to write. Unplanned accumulation of stock is that 1000 shirts were about to you sell in a year and 100 you keep it off as a stock. But that year there was no much of sale and you were able to sell off only 800 shirts, to which 200 shirts automatically got accumulated with your inventory. So this is considered as the unplanned accumulation of stock. And unplanned accumulation of stock is that every year you are able to sell 1000 shirts and 1000 stock you are supposed to keep. But this year you were able to sell off more than 1000 shirts, which is 1050 shirts you were able to sell it off. So that without any planning the inventory got decumulated to 50. This is considered as the unplanned decumulation of stock. I hope you all are clear with this. After this, what is the question? Okay, give the meaning of aggregate demand function, how it can be obtained graphically. Okay. So here what you are going to write. So ONM is the autonomous consumption and this is induced consumption. So autonomous plus induced consumption which is related to income, which is independent of income, that is autonomous consumption. And this is investment, which is completely not related to our income. Okay, this is okay. After this, when you add up this, okay, when you add this and this, you will get another line which is the aggregate demand, which is the consumption, autonomous consumption plus autonomous investment plus induced consumption. So when you add autonomous investment plus autonomous consumption plus induced consumption, you will get autonomous consumption plus autonomous investment plus induced consumption. Okay, this is considered as aggregate demand function which can be obtained in a graphical manner. So this is and this is both are parallel. Okay, and you need to say that this is considered as the ex ante demand. Ex ante demand is the expected demand. Ex post demand is the real demand, and this is considered as to be expected one. After this, what we have is here, write the chart of components of capital account. Okay, component of capital account is investment. In that, direct investment and portfolio investment. Direct investment is FDI, equity capital, reinvested in earning and all. Portfolio investment is FII, offshore fund. Okay, and in external borrowing is the external commercial borrowing, which can be short term debt also. External assistance is the government aid, intergovernment, multilateral and bilateral loans. This will all come under the capital account: investment, borrowing and assistance. So optimal choice of a consumer, it means it is the combination of balance sheet and indifference curve. So balance sheet where the consumer goes through with a bundle of combination of goods as per he can be able to pay the price of it, okay, as per his income. And indifference curve is the locus of the combination of the goods which gives him equal level of satisfaction. So here you need to write the assumption that the price of the goods is given, okay, income is also known, and we will check the affordability of the consumer, and not only affordability, along with that the consumer will try to get maximum satisfaction. So assumption is that other things being equal, taste and preference remain same, income is constant, consumer has the knowledge of indifference curve. So IC curve will be greater than IC2 and IC2 will be greater than IC1. This is the concept, and higher the IC and higher the level of satisfaction. So now here we need to give the diagram, which is completely considered of IC1, IC2, IC3 and the budget line. So here this is the budget line, this is IC1, IC2 and IC3. Okay. So where and all we have got, will give any kind of points. Okay, B, A, D. Okay, now here you need to understand which is the optimal choice of a consumer. First we'll go through with the B. B is not optimal choice of a consumer, at it is lying in IC1, and when the consumer can even afford for IC2, why he will go for the lesser satisfaction when he can go for better satisfaction. Even C is not the optimal choice of a consumer, though it is lying up, but still it is not the higher satisfaction. Why? Because it is lying in the same IC1. D is also not the optimal choice of a consumer, as it is out of the budget line. It means the consumer is not able to afford. It means why, if the consumer is having only 30 rupees, okay, 20 rupees, let it be, the consumer is having only 20 rupees, why he will go for some local chocolates when he can go for dairy milk and gems? And this is dark fantasy which the consumer cannot afford, because it is 35 rupees, which is out of his budget line, and this is very less as per his budget line. Why he will go for 5 rupee penny chocolates when he can go for 20 rupees gems and dairy milks? So likewise, okay, why D is not the optimal choice of a consumer, as it is out of the budget line which the consumer is not affordable. After this, A is the optimal choice of a consumer, as it is indifference curve and the budget line are tangential, so that the consumer can get maximum of satisfaction. The same story you need to write down here what I have told. So as per that you will get very good marks for the optimal choice of the consumer. After that it comes the features of indifference curve. So first is the IC curve increases the level of satisfaction. Higher the indifference curve, higher the level of satisfaction. So this is the first feature. Second is that IC curve always slopes downward from left to right. Why? Because it is the different combination of goods, so that IC curve will always slope from downward from left to right. After that, IC curve cannot intersect each other. If IC curve intersect each other, it will relate to conflicting results. So IC curve can never intersect each other. IC curve is convex, not concave. Why? Because IC curve is convex, not concave. As you see, maximum of one product, minimum of the another product, minimum of the one commodity, maximum of the another commodity, that's lead to indifference curve. But here maximum of the one product and maximum of the another product is not possible. That is not the concept of the indifference curve. And IC curve cannot be straight line. Why? Because he cannot go for the maximum of one product and the maximum of the another product. He cannot go constant. He has to maximize one thing in order to minimize one thing. He has to minimize one thing in order to maximize one thing. So that is the concept of IC. So that IC cannot be straight line. IC cannot be positively sloped. Why? Because here we cannot go for the maximum of the one product and the maximum of the another product. So IC curve cannot be positively sloped. If you write this much, you will be easily getting 6 marks. You need to write the diagram and then you need to write the story what I said. After this, what are the shapes of TP, MP and AP curve? So TP, as per the law of variable proportion, when the one input is keep on changing, when we start to increase only one input, in land and labor, we keep the land fixed and we keep on varying the labor. What happens? The law of variable proportion changes. So when you change one labor, if you keep on hiring and hiring, then the total product will keep on increasing and it will reach to the saturation point and it will start to fall. Okay, so this is the total product. So it is the formula for the number of input. One input keep on increasing. After that, average product. So average product is the formula for the average product is AP divided by total product per unit of output produced. Okay, so this is, it will always be in the shape of inverse U. Okay, and marginal product means with the additional increase of the input, what is the additional increase in the output, that is the marginal product. So when AP increasing, MP will increase more than AP. When AP is falling, MP will fall more than MP. So this is the shape of TP, AP and MP curves, and you need to write their formulas. By that easily you can get 6 marks. Okay, after this is explain the short-run equilibrium of monopoly firm when the cost of production is positive by using TR-TC curve with the help of a diagram. So monopolistic firm with the cost of production can be 0, and when the cost of production is positive, it means it can be more than 1, okay, not the 0 cost. So then what we need to do is that monopolistic firm also will try to sell most of their output to earn maximum of the profit. Okay, so that is what we need to understand with the following diagram. So how we will do the following diagram is that this is our quantity. Okay, this is our quantity of goods, any goods, and this will be here our TR, TC and profit we are going to calculate. Okay, so this is our TR, okay, this is our TR, and this one is our TC. This is TR. So wherever this is TR is equal to TC, TR is equal to TC. This is our quantity. This one is also our quantity. In this we will not have any profit. Why? Because total cost is equal to total revenue. Here also will not have any profit. Why? Because total cost is equal to total revenue. This is also break-even analysis where there is no profit, no loss. Here you can see the total cost is, here you can see the total revenue is more, the total cost is more than the total revenue, then it is loss. Okay, this phase is in the loss. And even here also you can see total cost is more than the total revenue, so this is also in the phase of loss. Here only the total revenue is high when compared to total cost, so this is profit. So this all area from this to here, it is profit. So this is the highest profit where the firm is earning. Why? Because in this quantity the firm is earning majority of the profit. Why? Because the total revenue, there is a very big gap between the total cost and total revenue. So as per this total cost and total revenue, we are going to calculate the profit. So in this stage, when there is TC is more, even the profit will is the profit or loss is curve is in the loss, and in this state it is profit. Again after this stage it is in the loss. Okay, again is in the loss. Here it is in the profit. This is the pi-r curve which depicts the profit. Okay, I hope you all are clear. The same story you need to write by giving them points. Okay, this give the point as B, this give the point as D, and this give the point as E, and then write in this situation. Okay, give any point to this as A. Okay, and here also give any point as B. In this situation where TC is more than when compared to TR, so this is in the loss. And here this is the break-even analysis because TR is equal to TC, and after that here also it is the break-even analysis because TC is equals to TR. Okay, this is the situation where the monopolistic firm will be earning more profit by selling more of the output, and under this quantity it is going to be very profitable to the monopolistic firm. Okay, when the cost price is positive. So this is what you need to write about the question whenever it comes. Find out the short-run equilibrium of the monopolistic firm when the cost of production is positive. Whatever the diagram you have done, based on to that the story you have to write. Okay, when there is the monopolistic competition, cost of production is positive, means that in that case the monopolistic firm will also act like the perfect competition and they'll try to sell more output as possible without keeping any stock. Okay, that is what you need to write. After this, here comes the question, very easy question, which is macroeconomic identities. First we'll understand GDP. GDP is the goods and services produced or the final, okay, these are the aggregate final goods produced in a year is considered as GDP. Example, all the consumption plus investment plus government, okay, expenditure plus export minus import is our GDP. Okay, now in GDP, how we will calculate, which is gross domestic product. Okay, gross domestic product is GDP. In this we need to calculate NDP, which is net domestic product. So GDP minus depreciation. Depreciation is nothing but the wear and tear. Okay, any value, reduction in value due to the daily usage, due to daily wear and tear. So that will when we remove, we get the net domestic value. After that we need to calculate GNP, which is the market value of the goods and services produced in a year. What is mean by GNP? Which is this is gross national product, which is the market value. This is the final goods and services produced in the year. This is the market value of the goods and services produced in a year. So that is GNP. Okay, so how we will calculate GNP is GDP plus factor income earned by the domestic factor of production employed. So from our income earned by Indians or domestic people from abroad minus income gone to abroad. So this is our GNP. Okay, now you have to calculate NNP, which is again you need to remove the depreciation. GNP minus depreciation, whereby that will calculate net national product. Now net national product can be calculated into two, one in the factor cost and one in the market cost. In market cost, what we are going to do, NNP at market cost, we are going to remove indirect taxes and minus subsidy. Okay, but NNP at market cost, we are going to add, okay, minus indirect tax, plus subsidy. Here indirect tax minus subsidy. Okay, this is factor cost, this is market cost. In market cost, NNP is equal with the national income also. Okay, it is equal with the national income, it is equal to GDP also. So MC is minus market cost, it is NNP minus indirect tax plus subsidy, that is market cost. Factor cost is minus indirect tax and minus subsidy, that is NNP. After NNP, what we are going to calculate is personal income. How we will calculate personal income is from the undistributed profit. So national income minus undistributed profit. Why? Because they keep it as reserve, they don't distribute it, so that will be, we will remove it. After that, minus household paying interest to government and firm. Okay, that we will remove, and minus corporate tax, that also will remove. Only we will add one thing, which is government and firm paying interest to household, that we will add. By that we calculate personal income. After that, we need to calculate personal disposable income. Personal disposable income, which is personal income minus tax and non-tax payment. So tax means income tax, any taxes. Non-tax is the penalty and fine. After paying any kind of tax and non-tax payment, the rest of the money is considered as personal disposable income. It is our choice to consume and save the money. So this is overall macroeconomic identities. First you need to write about GDP, which is the final aggregate goods and services produced in a year, which is of consumption, investment, government, export minus import, and then NDP, which is GDP minus depreciation, wear and tear, okay, reduction of the value due to the usages, that will remove from GDP, by that will get NDP. And then GNP, which is the market value of the goods and services, is called as gross national product. So how we will calculate gross national product? GDP plus income earned by domestic people from abroad minus income gone to abroad, okay, that when we remove by we get the GNP. And now we will calculate NNP by minusing depreciation from GNP. Will calculate NNP. Now NNP are in factor cost and market cost. In market cost will remove indirect tax but add subsidy, but in factor cost will remove indirect tax and also will remove the subsidy. So NNP will be completely equal to national income. So now after national income we'll calculate personal income. So personal income is the undistributed profit minus, from national income we will remove undistributed profit, and then we'll remove household paying interest to government and firm minus corporate tax plus government of and firm paying interest to household, that we will add it. And after that, calculating personal income, we'll calculate personal disposable income, which is personal income minus tax and non-tax payment. So tax is any kind of income, in income tax, wealth tax, whatever it is. Non-tax is the penalty and fine. So this is the personal disposable income, which every individual choice, whether they want to consume and save, it is as per that they can spend and they can save. After that we have the goldsmith lala. Here you need to write this story, okay, how the commercial bank make money out of a thin layer of air, okay. So lala is a goldsmith, okay. What people used to do, like gold, they used to keep gold with lala, and lala used to give a bill, paper will used to give tokens, okay, as per the gold which is being submitted, okay, like a bill example, which is like a paper money or currency, will say. They will receiving a paper receipt, okay. So if they deposit gold to lala, they will receive the paper receipt. So paper receipt got very famous, and it's got recognition, and it started to circulate. So every people used to keep their gold with lala. So now what is that? One person, Ali, he goes and asks 100 paper receipt, okay. He asked 100 grams of 100 kgs of gold as a loan from lala, okay, 100 kgs of gold from lala, okay. Now for example, he has kept 1000 kgs of people. All the people have come and submitted over there to lala. In this, Ali, a person, is coming and asking 100 kg to as a loan from lala. So what lala thinks, that every people will not all in one come and ask for the gold. So 100 kg, so that he gives 100 kg loan to Ali, and he what he does, he charges some interest for Ali, and Ali goes and give his loan to Manoj, okay. He is repaying his debt and he is giving the 100 kgs to Manoj. Now 100 kg, this Manoj goes and again deposit to lala, okay. Now by that what happened, he has created 1100 kg out of thin layer with doing nothing. Along with that, now Ali has to pay more 100 kgs of gold as loan to lala, so that it is that lala has created money over a very thin layer of air, which is the same what the modern banking of today is doing. I hope you are clear with the concept. We have the question, which is classification of expenditure. Classification of expenditure is consist of revenue expenditure and capital expenditure. So revenue expenditure, we have planned revenue expenditure unplanned revenue expenditure. We have planned capital expenditure and unplanned capital expenditure. So planned expenditure will be the assistance given to the state and union territory, and unplanned expenditure is serving to economic and defense and social expenditures. Similarly, capital expenditure, revenue is our day-to-day operation, capital is our long term and the capital which huge borrowing. Okay, so capital expenditure, which is planned capital expenditure, is completely giving assistance to the state and financial territory, united union territory, and unplanned expenditure serving to economy, social services and to the defense services. After this, what you need to write is balance of payment. Balance of payment first is export and import. Okay, like how much of cash inflow to be maintained with cash outflow. After that, invisible services, like what and all the services we provide to foreigners and to domestic, that is the invisible services which is being we are doing. Okay, like we are offering any kind of counseling or teaching services to domestic and foreign, to which what and all the payment we receive from foreign countries, that all come under the invisible services. After that, we'll get the transfer payment, any kind of for any kind of development program, when we get any kind of subsidies from the foreign countries, so that all come under the transfer payment. After transfer payment, we have capital account, which deals with the long term equity borrowings and loans. Okay, and repayments, long term repayments of loans comes under the capital account. And then last is the official reserve, when our inflow is more when compared to outflow, that is considered as surplus, and the surplus will always kept as a reserve in the form of gold, in the form of foreign exchange, so that is considered as official reserve account. After that, we'll go through with the practical oriented question, which is a consumer has want to consume two goods, which is the price of banana which is of rupees 5, and price of mango which is of rupees 10. Income is equals to 40. Now what we need to do, 40 divided by price of banana is 5 is equals to 5 ones are 5, 8s are 40. So the consumer can consume 8 bananas. And second one, the income is 40 and the price of mango is 10. By that, 10 ones are 10 fours are is the mango. The consumer can consume 4 mangoes from his income. Okay, now the third question, what is being asked here, is the slope of budget line downward or upward? If the answer is downward. After that, what is the question here? How much are the bundles on the budget line equal to the consumer income or not? Yes, the bundles on the budget line is equal to the consumer income. Lastly, if you want to have more of banana, you have to give up mango. Is it true? Yes, it is true. In order to have more of banana, you have to give up some of the mangoes and vice versa. By this, you can get easily 5 marks. After this, we have got the question. Compute the total revenue, marginal revenue and average revenue schedule in the following table when market price of each unit is rupees 10. So we need to write for each and every unit, we need to multiply it with 10. Why? Because 1 unit is 10. 0 into 10, 0. 1 into 10, 10. 2 into 10, 20. 3 into 10, 30. 4 into 10, 40. 5 into 10, 50. 6 into 10, 60. Now, what is the formula for MR? TRN minus TRN and minus 1. 0, we don't have upper value. 10 minus 0, 10. 20 minus 10, 10. 30 minus 20, 10. 40 minus 30, 10. 50 minus 40, 10. 60 minus 50, 10. AR, what is the formula? TR divided by Q. So, TR divided by Q. 0 divided by 0, 0. 10 divided by 1, 10. 20 divided by 2, 10, 30 divided by 3, 10, 40 divided by 4, 10, 50 divided by 5, 10, 60 divided by 6, 10. Lastly, demonetization also you can write, but in a very easiest manner. What you can write: USA has dollar, UK has pound, Germany has euro, Japan has yen, China has yuan, Argentina has peso, UAE has dirham, Bangladesh has taka, Russia has ruble. By this easily you can secure more than passing package, and the way if you write in a very attractive manner, by knowing all the concept what is what, and by writing general also, you can score maximum of marks. So don't lose hope. Be smart. First attempt all the MCQs, which is of rupee like marks, overall marks 20. How? MCQ 5, fill up 5, match up 5, one word 5. Overall 1 mark itself you can get 20. After that 2 mark you can get 18. Okay, why? Because now this time you are going to get more of the options. So 1 mark 20, 2 mark 18. After that practical oriented 10 marks for sure. So easily you can get 45 marks by this, only by writing MCQ, fill up, match up, one word, 2 marks, and practical oriented. Along with this, law of diminishing marginal utility is a very pakka question. Optimal choice of a consumer, indifference curve, and some table question will all surely come, so that you can easily get more than 60% in economy if you do the smart work than doing the hard work. Why? Because smart work is the concentrated of hard work, which will also surely pay you more benefit and more reward for whatever the efforts you have put on. So that is it from me. I hope the video is helpful to you, all of you. Thank you so much for watching, and if you do like my videos and my teaching, then do subscribe, share it with your friends, comment your suggestions, and hit the bell icon so that you can get all my latest update and notification. Thank you so much for watching.